Okay, Happy New Year, everyone. Welcome back to the first weekly market review for 2024. Today, I'm back from my holiday break for my first work day in SIAS on the 2nd of January. And together with me here, I have Mr. Gerald Wong. I miss you, Mr. Gerald, on your market updates. I think today you have some yearly review that you'll be going through with us. And STI do have a very strong performance towards the end of the year. Would you like to give us some highlights first before we go into the details?
Yes, hi everyone. Thanks so much for joining the weekly market review again. Good to have everyone back in the new year. Today is my first working day for 2024 as well. So what we'll do is because you might not have been catching up in the markets over the past week, we wanted to just do a quick recap around what has happened, as well as how the market has performed for the whole of 2023.
Okay, I think without further ado, Gerald, take it away and brief us through what happened throughout 2023 and what we can look forward in 2024.
Okay, so as usual, we'll start with the disclaimer that today's sharing is for information purposes only. It should not be taken to be financial advice in any way. If you find the session helpful, do leave us a review on Google by scanning this QR code or by going to this URL. And if you are interested to join SIAS as a member, it costs just $12 per year or working out to just $1 per month. So if your New Year resolution is to be able to access this investor education progress, be able to join some of these exclusive events such as our monthly SIAS, then do join the member of SIAS by scanning the QR code or once again going to this website. Okay, so many of you might not have been checking the markets in the last week of the year, maybe busy catching up with your friends or even away on a holiday. So what we saw in the last week is that the global stock market ended on a positive note. The S&P 500, Nasdaq, as well as Dow Jones continued to climb to reach close to their all-time highs, especially for the S&P 500, now close to the 4,800 mark. But what was very interesting when I was updating this chart is to see the STI gaining more than 3% last week to now above 3,200 level. So if you recall, for a lot of the past few weeks, the US stocks have actually been powering along, but the STI has effectively been a laggard. And I mentioned earlier that this was because the banks have been a drag. But what we saw in the last week of the year is that the STI actually saw a catch up, actually going now back to above the 3,200 levels and outperforming the US stocks in the last week of the year. Okay, so in a nutshell, that was really what happened in the last week. If I take the longer term view and look at what has happened for the whole of 2023, then the performance difference becomes very distinct. This is the price return in local currency across the US stock market as well as the Singapore stock market. What we saw is that the Nasdaq was the strongest performer, up by 45% for the whole of 2023. Okay, so if you have been following the US tech stocks, Magnificent Seven, then this would effectively have been not too much of a surprise to you, because for some of these stocks like Nvidia, Meta, we saw that they have more than doubled in the whole of 2023. So part of it is driven by the fact that there's expectations of interest rates starting to come down, but then at the same time, some of these tech stocks have also been more resilient than previously expected. And driving this recovery is also the increased interest in the AI sector. Okay, so with the strong performance in the tech stocks, the S&P 500 also did well with a 25% gain last year. And then towards the end of last year, we also saw the Dow Jones hitting an all-time high with a 14% gain in the whole of 2023. The STI's performance is a bit more lackluster. So after the very strong performance in 2022, when it outperformed the US market, what we saw in the STI is that it was about flat last year. Part of the reason for that is that if you look at the Singapore market, a big part of it is driven by the Singapore banks. And given the expectations that interest rates might be close to the peak, we actually saw some weakness in the share price of the Singapore banks, especially towards the second half of last year. Okay, so what were the stocks that did well in the Singapore market last year? Actually, even while the STI was flat, there were a few stocks that did particularly well. Okay, what we noticed is that most of them are actually industrial stocks. Okay, so Sembcorp Industries, a name that we have talked about a few times, actually with gains of 57% for the whole of 2023. Keppel Corp gains of 53.3%. If you recall, they also had the distributions of Seatrium or distribution of the Keppel Offshore and Marine shares, so that effectively helped the share price performance last year as well. What we saw also is a few other industrial names, SIA up by 19%, Yangzijiang Shipbuilding 16.4%, and ST Engineering 15%. Okay, so effectively, what we saw is that even though the STI was flat, the gains in the STI was actually led by these industrial stocks, with a range of gains of between 15% and 57%. Okay, in terms of the top losers, what we see here would be a mix of property names, some names with overseas consumer exposure, as well as some hardware tech names. Okay, so in terms of the worst performance, we saw Hong Kong Land down by 24%. And we also have another property related name, City Developments, down by 18.5%. So with the higher interest rates, we see that has impacted the sentiment towards the property sector. Okay, Thai Beverage down 23%, in line with what we saw for weakness in the Thai market, because of the political uncertainty that we saw, as well as the slower than expected recovery in the consumer sector. Singapore's manufacturing sector was weak for most of 2023. So we also saw the share price of Venture Corp taking a hit, down by 20%. And then last but not least, we've got DFI Retail Group, also impacted by weak consumer sentiment, especially towards some of its exposure in Greater China. Okay, so what we'll do today is talk about 3 stocks that did particularly well in 2023. Okay, I'll be focusing on the blue chip stocks. And the first one that has driven a lot of the stronger performance of the STI is Sembcorp Industries. Okay, we saw it actually being below 350 at the start of the year, climbing all the way to actually above $6 sometime in August, and then having a correction towards about 450 towards October, before recovering to about 510 at the end of the year. Okay, so a lot of the gains were actually in the first half of the year. Okay, and then we saw a bit of a pullback, and then towards the end of the year, some positive sentiment towards Sembcorp Industries as well. Okay, so if we were to look at Sembcorp Industries, I think one key thing to highlight is that the fundamentals continue to improve, especially if I look at the net profit. It has actually increased by 55% in the first half of 2023. So this is really driven by the improved operations in some of its utilities assets, which has actually helped to drive up the profitability. So with that, the company has also announced an interim dividend 5 cents per share. And that has also been something that was rewarding towards shareholders. Okay, so I think you rarely see a lot of the Singapore blue chip companies having such a very strong profit growth. And I think because of this has helped to boost the share price performance of Sembcorp Industries. The other key factor that is driving the strength in the Sembcorp Industries share price is really this move towards renewable energy. Okay, so previously it has got a target to be able to achieved 10 gigawatts of renewable capacity. Okay, and what we saw in its investor day in November is that they now want to be able to target 25 gigawatts by 2028. So if you're looking at the share price of Sembcorp Industries and the bounce towards the later part of last year, this might have been one of the reasons where, because of this commitment to continually grow its renewable capacity, it has actually helped to boost its share price as investors gain confidence towards its shift away from conventional energy towards renewable energy. Okay, so that is the best performer in the STI last year. We also have Singapore Airlines doing fairly well. So this is in line with the global recovery that we saw in air travel. I'm not sure whether you managed to take a break over the December holidays, but you'll probably realize that the airport, the flights remain fairly packed. You probably have to pay a higher fare for your trip as well. So clearly we see this revenge travel coming through. And most of it played out in SIA share price in the first half of the year, where it actually reached close to $8 per share, before subsequently coming down as the momentum towards the global travel recovery slowed down. And it was also impacted by sentiment because of the concerns around the higher oil prices. Okay, so if you recall, a big part of the strong performance of SIA was in the first half of the year. And once again, it is driven by the stronger profits that it was able to book in the first half of the fiscal year 23-24. SIA has a fiscal year end March, so effectively we are talking about the half year ending September. What we see here is a stronger growth in your revenue of about 9% compared to the previous year. It managed to keep its costs under control, and with that, the net profit actually increased by about 55% compared to the first half of the previous year. So quite similar to what we saw for Sembcorp Industries, where the improvement in profit actually helped to drive improved sentiment towards the stock, as well as a stronger share price performance. Okay, why has SIA share price actually started to come down? One of the key worries is now coming through from the cargo sector. So with the post-COVID logistics bottlenecks, what we saw is that it was able to earn a very good profit on its cargo business, effectively because some of the shipping lanes might not have been fully utilized. There was a lack of vessels that were carrying these goods around. So as a result, the air cargo business actually was very strong after the early stages of the post-COVID recovery. But that started to taper down in the past few quarters, even though it still remains above the pre-COVID levels. So this is something that we'll continue to keep a lookout for, especially given the economic environment that we are now in. We'll be watching out to see whether we'll see a further decline in the cargo business. Okay, the next name that has also done very well last year is Yangzijiang Shipbuilding. So what we see here is the bounce in the share price, especially towards July and September of last year, and then subsequently tapering down a bit towards 145 per share at the end of the year. Okay, so if I were to look at the profit of Yangzijiang Shipbuilding, again, another name where the strong share price performance is driven by higher profit. If you look at the revenue in the first half of the year, up by 16%, because of the stronger order book that it has and the higher revenue that it is able to then book as it is constructing these vessels. Okay, the gross margin for Yangzijiang also saw a recovery as the raw material cost started to come down, and because of the weakness in the Chinese yuan, that actually helped to boost the margins that Yangzijiang was able to make from constructing the vessels. So with that, the higher revenue and higher margin led to, once again, a strong growth in the profit in the first half of the year. Again, close to 50%, slightly lower than what we saw for Semcom Industries and SIA, but still a decent profit growth of 47% in the first half of last year. Okay, the other interesting point is what is driving the positive sentiment for Yang Zhejiang is also the order book being at a very high level, 14.7 billion as of 30th of June 2023, compared to just 3.1 billion in December 2020. So it's been able to gain a lot of new orders, whether is it in the form of bulk carriers or even some of these LNG carriers. And that has helped to boost the order book, as it will progressively recognize this order book as revenue over the next few years. Okay, so I've gone through three of the names that did particularly well in 2023. As we start the new year, it is still a relatively quiet week in terms of the economic data releases, as well as the corporate developments. So we have just seen the Singapore GDP data coming out for the whole of 2023. Singapore's economy grew by 1.2%, just slightly above what the MTI was estimating, which is around 1%. And that is really driven by the recovery in the manufacturing sector towards the fourth quarter of last year. So hopefully this positive momentum can continue into 2024. And that is something that can continue to help to boost sentiment towards the stock market. We also have the first 6-month Singapore T-bill auction this Thursday on the 4th of January. And in terms of major US economic releases, we have the US non-farm payroll data coming out on Friday, the 5th of January. So those are the few things that we are looking out for this week. Relatively quiet week to get your 2024 started. So spend this time to actually just refresh yourself around what has happened and also prepare yourself for what is happening in the year ahead. With that, I hand over to Sunny, who will hand us through the technical indicators. It's something that we've been missing for the whole of December, and we really want to know where we are now in terms of the technical indicators. So over to you, Sunny.
Okay, thanks, Gerald. Yes, I have also been catching up on the charts on see how the STI has performed, especially during the last 2 weeks of December. So before that, just let me share my charts. Okay, so this is the STI daily chart. So I have been away in December and I have only been briefly catching up on how the STI is doing. But I was really surprised by especially the last final week of 2023, how STI has performed, up more than 3%, as what Gerald mentioned earlier. So how did the STI perform for the whole year? I think Gerald touched on the numbers just now. We are down about 0.3% for STI for the whole year. I take it as a relatively a flat kind of performance. So it's like a nothing burger, not much to look forward to. But I think 2024, there could be more positive notes coming in, especially taking note from the strong uptrend that we see in December last year. So in December, after we touched the low at the beginning of December, somewhere around the 3,050 points level, you can see that STI jumped for that month around 6%, and most of that gain come in the last week of December, up 3.2%. So where is STI going to head in the next few months in 2024? I would say at this level, current level now at 3240, which is the closing last year, as well as this morning 3236. I think we may be able to push the next resistance level around the 3,277 points level, which is the September high that you see over here. And if we are able to touch this level, I believe there could be some mean reversion or retracement coming in. Why? Because the indicators, at least one of the indicators, the RSI, has been showing signs that it has gone into the overbought level, now reading at 74. So as we can see previously, when the STI in July went into the overbought level to a high of about 78 points, we have a pretty steep retracement. So we don't know how deep the retracement will be, but maybe it would at least go back to the 200 days moving average, which is the red line that you see here, EMA 200, that's around the 3182 level. So this is the first support that I'm looking at for the STI. And this is also where I believe for the year of 2024, it's likely going to be a positive year with the interest rate coming down and some of the STI blue chips and the industrial names having very strong numbers. That momentum could likely continue into the STI into 2024. So first support level, 200 days moving average 3182, and below that, the next support I'm looking at will be somewhere around the June low of last year at around the 3155 or 3150 level. So this is the support zone that I'm looking at to maybe get back into the STI index. Okay, so I highlight this in orange over here. Previously, I highlight in orange over here, the support zone for STI is likely going to be around here. We crashed below that in October last year, but the end of the year, this lag in recovery compared to the US indices really come in really late in December. So for 2024, I think for the first few months, we may likely test September high at 3277. We may have a mean reversion or a slight retracement back at least to the 200 days moving average at 3182 before, or even the June high last year at 3155 or 3150. So this is the support level that we are looking at for STI to consolidate before we have a chance to push up higher towards the middle part of the year for the STI. Indicators wise, the MACD histogram is still showing very strong sign of a positive momentum. Hence the reason I'm saying that it will push to the September high. And why I would say that there may be a reversion or mean reversion happening is because the RSI is slightly overheated right now above the overbought zone. So we'll continue to update you on these developments on the technical indicators performance every week on the weekly market review. And for now, I'm waiting for a retracement. This level, the risk and reward ratio is not really in our favor right now. And with this strong growth in December, we might also be heading into a very rich valuation for some of the companies that might also cause some traders to take some money off the market. So look for a retracement first before before going into the SCI again. Currently, I think it's a bit overbought now for the STI index. Okay, going into the US indices, okay, needless to say, the numbers that we saw earlier from Gerald's presentation, for Dow Jones Index, the whole of last year, we are up about 13%. So as you can see, STI, before I left for my holiday, I said STI has been lagging in the performance where you see the 3 US index has been surging since the end of October. So for the past last 2 months of last year, the US indices has been performing very strongly, and STI is now catching up on this uptrend that we are seeing from the US markets. So where is the Dow Jones Index likely to hit? So we are at the all-time high now, or close to the all-time high. So definitely there is no previous indication that we can see over here, but looking at the rise that we see here, and you can see that the Dow Jones Index on the RSI is heading into the 76 level, and even the 14 days moving average on the RSI is hitting 79, close to the 80-point level. We are definitely in a overbought zone right now for the Dow Jones Index, and that also means that we are looking for some kind of reversion. So where can the reversion revert to? Maybe the next support level we are looking at, you have the 2022 April high somewhere around the 35,480 points level or 34,500 points level. On a nearer term, we can see that the previous high that we saw in 2023 around the 1st of August, that's also around the 35,550 points level. So this is a major support level that we are looking at if a retracement is going to happen. And of course, you have the 20 days moving average, which is the Bollinger Band basis. This black line over here, that's at 36,947 points. That is a short-term kind of a moving average. So not going to be a very strong support. But if you go slightly lower, the 50 days moving average, the blue line over here, that could also come in as a support level. And that is pretty close to the August high that we see last year. So around the 35,800 and 35,500 level, I expect some kind of support coming in for the Dow Jones Index, with the final support coming in at the 100 days moving average, which is the orange or the amber line that you see here at around 35,100 points level. So 35,000 would be a very crucial handle for the Dow Jones Index to look at for the uptrend to continue its momentum into 2024. So key thing to note here, the MACD indicator have already shown the first sign of weakness, because you can see that the MACD line here in black has crossed below the red line, which is the signal line, and we now have a negative MACD number. So that means that the crossover has happened, and this uptrend that we see may have a change in direction, and a pullback is likely to happen, and that is also confirmed by the RSI being in the overbought territory right now. So do look out for some kind of retracement happening in the Dow Jones Index, and look out for the support level to see if those support level around the 50 days moving average or the 100 days moving average is likely to hold on for the Dow Jones Index to have a rebound going forward. Next will be the S&P 500, also up about 24% or 25% last year. So we are heading into the overbought zone as well for the RSI, now reading at 70, slightly above 70. The 14 days moving average of the RSI is at 74. We also have a MACD indicator showing the first negative sign on the last day of 2023, last trading day of 2023. So that means that we may have a change in direction over here on the S&P 500 as we have peaked to the high of last year. Okay, so the previous number that we see was at 4,818 points. That was the highest that we saw somewhere at the beginning of 2022 or the end of 2021. So if before we push this level, this definitely will be a very strong resistance level with both indicators showing overbought or extended stretch from the S&P 500. A pullback will likely pull back to the high that we saw this year, which is around the 4,600 points level. That will be the first support level that I'm looking at. And then after that, we have the 50 days moving average at around 4,571 points level, which is also coinciding with the high in 1st of September over here. So look for a retracement back to the at least the 50 days moving average before thinking of loading up on the S&P 500 index, which has a very good performance last year. The next support level I'm looking at will be 4,481 points. That's the amber line, the orange line, which is the 100 days moving average. So 100 days moving average is actually a key pivot point for most of the technical indicators reading on moving average. That is where if you are able to close above the 100 days moving average, that means that we are usually in a continuation trend of the uptrend. However, if we close below the 100 days moving average, then that means the uptrend that we have seen may be invalidated already. For the shorter term moving average, those are trend following kind of a support level. So we are looking for support at around the 20 and 50 days moving average, but I think the 20 days is too short a term to look at. So 50 days moving average would be a key continuation trend of support level that we are looking at. So support level for S&P 500, 4751, that is the 50 days moving average, and the 100 days moving average at 4481. So around the 4,500 handle, that will be the key point to look out for S&P 500 index. Lastly, the best major performance of the three major US indices, that is the Nasdaq Composite Index. So up more than 40% last year. And in the last 2 days of 2023, last 2 trading days, we see a bit of a pullback over here, mainly because I believe the technical indicators has been in the overbought zone. And the next MACD indicator has also seen that the MACD is converging towards the signal line, although we do not have a negative reading yet. But I believe in the next few days, we may see a negative reading now for the Nasdaq Composite Index. So we are also due for a pullback, due for a mean reversion. And the next support level that we are looking at, you can see the high over here, the previous high that we saw in 2023, that is around the 14,429 points level, or even the 50 days moving average at 14,285 points level. So these are the two key levels that we are looking at for the Nasdaq Composite to consolidate. So around this 14,500 level would be the key zone that we are looking at for the Nasdaq to have some consolidation before the rebounds continues. So we managed to cross above or close above the 15,000 handle for the Nasdaq Composite Index. That is a very strong signal that the uptrend is likely going to continue. And now the reading is just 11 points above the 15,000 mark. So we are foreseeing that with the indicator showing that the index is overstretched now, we will likely see a pullback towards the 50 days moving average, which is around the 14,285 points level. And for your reference, the 100 days moving average is at 13,900, just a tad below the 14,000 handle, which could also be where the double top that you observed somewhere in the June of last year as well, which may be converted from a resistance to a support level. So these are some of the key levels that you should be looking at for the Singapore STI index as well as the three major US indices. I think the momentum has been pretty strong in the final few months of 2023, and this momentum is likely to continue going forward. So do look out for a retracement, and then from there you can do your dollar cost averaging or see how you want to position your portfolio accordingly for the 2024 year. Okay, so that is my take on the technical charts. Anything to add, Gerald?
Well, today is the first working day of 2024. So just wanted to wish all the viewers a happy 2024. May you achieve the financial success as well as your aspirations in the new year ahead.
Yes, so first day of 2024, Happy New Year, everyone. And I think this year will likely be a better year than the previous year with the macro environment of the interest rate coming down. Of course, we also have some geopolitical risks that we are look out for. So these are some of the key things that we will be looking at for this year. But as usual, on here, weekly market review, we'll keep you updated on what's happening on the market. So I think this is the time that we have for the first episode of the weekly market review. And we will see you again next week, next Monday, and they will give you the latest update of what's happening in the market. And that's all I have for this week. Thanks, everyone.
Thank you.